Hey, hi guys. This is Antoine with Admini Solutions. So this week I want to talk to you about a book I read in the last month and the changes that it did to my business. So let's get started. Um, the book is called Simple Numbers, Straight Talk, and Big Profit by Crabtree. Greg came to a conference I attended last year. And he showed up and he wanted to talk to us about accounting and numbers and whatnot. And, you get the usual when you have business owners in the room, the perceive that we're all going to go into a coma listening to all this stuff. But I found his approach to be really fresh, not really innovative, but more really down to earth, really covering the basics and whatnot. I bought the book immediately as soon as I got home, devoured it. It had made some significant changes. So I would highly recommend that you buy this book immediately. You can go, you have the link at the bottom here, which is seeingbeyondnumbers.com. You will have an opportunity to buy the book. I would highly recommend that you do that immediately and get it done. So here's what I got out of the book for me. Okay. There's several key points. One of them is the owner's salary, and it was one of the things was really interesting is he asked in the room how many of the business owners in the room actually paid themselves a $30,000 flat salary for the owners, and quite a few ends went in the room, and I knew some people that were paying themselves that $30,000 number. And his first thing was that why would you do such a thing? It really isn't helping your business. It's not helping you. And overall, it's just fogging your view. If you don't have a market-based wage, sorry, for yourself, then your P&L is not telling the whole story because it's considering that you are getting paid $30,000, and the question is, well, do you deserve $30,000? So you really should have a good idea of what your salary should be for your position. There is multiple sources where you can find that out. Salary.com if you're outside of Florida. In Florida, I found a website called floridawages.com, which was pretty amazing. It has a lot of industries and give you a lot of insights of the salaries, not only for you, but everybody in your team. What is the high end and what is the low end for each salary? And then look at that and compare it to your salary and everybody else. But the vast majority of people actually in your company are paid properly, otherwise they wouldn't stay. But what you really need to do is pay yourself a decent wage based on your job description, the title, and what the market-based wage is. So that was the first one was really interesting for that. The second one is profits. 10% is the new break even. Often look at what is a proper profit for a company. And he laid it out in this book. And Greg has worked with many companies, a lot of them in the service industry. So he has a great deal of expertise, and I could see that a lot of people in the room were nodding that your break even is 10%. 5% net profit or less is life support. It's very difficult to sustain a company if you're making about 5% in net profit. You're always running after your cash, and it's just very difficult. So 10 profit net profit is a good business. So if you have 10% net profit is good, and if you have 15% net profit is a great company, and then you're ready for growth. Because with 15% net profit, this is where you can start to invest. Obviously, distribution should only be paid after debt and investors are paid off. So that's what was interesting is like people pay themselves 30%, $30,000 salary, and then they're going on the assumption that they're going to be taking the distributions at the end, which is really the bad way to go about it. Because again, if you're paying yourself $30,000 as a salary and you're showing a 10% net profit, then it's not really the truth because your salary should probably be something like $60,000 or $70,000. And if you were paid that wage, would you have 10% net profit? So that was really the interesting approach to that. Um, know your labor productivity. That's the other thing that I got out of this book. And he talks about implementing a salary cap, just like the NFL. Everybody knows that the NFL has salary cap. And the reason why they do that is because it's very difficult to manage your team if you don't have a salary cap, if you don't know where the line in the sand is. So you need to know where the line in the sand is for your company and have a salary cap. 15% in net profit before any raises, including you. So if anyone, you need to actually, give everybody a fair market wage. And if anyone actually comes to you with a raise, you got to look at your salary cap. And maybe the best thing for you to do is to let go of that person and find someone that is going to be willing to work within that salary cap, which is based on the fair market wage. So you need to know your labor efficiency ratio for your company. And the labor efficiency ratio is your gross profit divided by your labor cost. So, for example, it's $500,000 in gross profit divided by $250,000 in labor is a 2.0 ratio. So you just need to know what your ratio is, and you live by that, and you monitor it on an ongoing basis to know where you are with your labor ratio. If you go below 2.0, and 2.0 as you go, you know something's got to go. Either you got to increase sales or you got a lower salary. Maybe time to let go of someone and subcontract with a contractor out there. The fourth thing I got out of the book is knowing your cash flow. You will run out of cash if you don't sell. That's what your cash flow is. Will tell you when you will run out of cash if you don't sell another widget. That's basically it. So if you don't make another sale, how long is it going to tell you for you to run out of cash? And your P&L is lying to you, because your P&L may be telling you a very rosy picture regarding your profits, and it may show you a 12% net profit, and that's fine and dandy. But your cash flow is what rules the day. If you haven't collected on these invoices, your P&L may be looking very, very good, but if you haven't collected that cash, then you're short on cash. So you need to do that on a weekly basis and know when you're going to be running out of cash. So it's you can do. We did it with a spreadsheet where we did the columns by week, and week by week we know all the money that's going to be going out, paying those bills, paying the salaries, and paying all this out. We know how much money we have in the bank, and we know the money that's going to be coming in. And at one point in the line, as you're going down the columns, you're going to see you running out of cash. You need to know if it's 4 weeks, 6 weeks, 10 weeks, 20 weeks. You just need to know when that is and monitor that. The next thing I got, and it was very interesting because there was a bit of a pushback in the room, is about being transparent about your salary and with your team. Craig talks about that. He's completely open with his company. All the salaries on the table. Everybody knows how much everybody else is making. We did the same with our company, and I thought it was very refreshing, because what I got is that, and I suspect that that's the case for a lot of companies, is your staff think you make more than you do. And they also probably think you make more profits than you do. If they were to know, and if you have a fair market-based wage, well, why are you hiding it? You can actually put that. This is the market wage that a general manager, this is my title within the company, this is what I do, or CEO in a company of that size should be making that type of money. And in your position, the low end, the high end is that. So everybody's like, okay, got it. They'll get the salary cap. They know where they fit. And it's actually very empowering. And it also will help them that, if you want to make more money, this is the cap within your job title. So if you want to make more money, if you want to increase your salary by $10,000, $20,000, then you need to add more value. You need to learn better skills. You need to add something to the company that will increase our income. So that was extremely refreshing. We did it in our company, and I love the fact that everybody knows what everybody is making, and I think it's really great. The last thing that I got out of Greg was the overnight success and how long it takes, especially with his experience in dealing with so many companies, because some of us or out there. I've been doing this for a while now. When should I know to pull the plug? Where do I know I need to continue? And he says it takes about 10 to 15 years for overnight success. That's when you can measure a company. Any company that survives the 3 to 5 year um, period is doing pretty good. And a 10 to 20% growth per year is actually very healthy. 30% for 3 years in a row is a fast growing company. And it's very hard to sustain 30% on a constant basis. Imagine, you do that in the early years because you're growing, but after a while, doing 30% on a constant basis is very, very hard. It's very, it can strain a business, so, the 10 20% growth per year is a good number to do. And then just do the math for you. So if your goal is to make $2 million in your company, and you know that a good, stable 10 to 20% growth per year, then you just can do the calculation of how many years it's going to take me to get there. And if it's not, if it's too many years, then maybe you're going to be looking for investment and grow your company with investors. But that's really the key. So that was it. That was the presentation. It was a great book. I highly recommend that you purchase it and you read it. I think it's going to have a huge impact on your business and your a lot of perceived things you have about your business. Please like us at facebook.com/adminisolution. You can also follow me at Dupont 65. And if you're watching this on YouTube, please just click like it and put some comments, and I will monitor that and answer any questions you have. Thank you very much.